The clickbait is crazy today on YouTube. If you just type in AMC stock, crazy amounts of clickbait today. But we're not going to do that to you guys here in this video. What we are going to do is go over a realistic price prediction for AMC this week, because the markets, in my opinion, are not going to be as great as a lot of people will expect. We have the worst week this last week since March of 2020, as Netflix did help bring the markets down. And if you guys take a look, this is the SPY. This is March of 2020, this week right here. That looks like exactly, like almost down to the candles, what we seen during this last week. And we broke under our critical level at the 200-day moving average, and we gapped down under that. So more pain is to come, but I'm not as pessimistic about a lot of these other mid or small cap stock. Well, let me rephrase. Small caps probably could continue to come down. AMC is not classified as a small cap stock. It's a mid cap stock. It's around that $10 billion valuation. A mid-cap stock is really like $2 billion or higher. My personal definition is like $5 to $10 billion. That's really your mid-cap stock, even as high as $30 billion. That's really your mid-cap stock. And those stocks are down, 60 to 80% from their highs in some cases. And I don't think the sell-off is going to be as rapid in the mid-caps as I do think so it will be in the large caps and the broad indexes. So we're going to dive into this video, some good and some bad to pull out of this, save you guys the clickbait. We're not going to waste your time. Let's get into it. Hit the like button for me, consider subscribing to the channel, and let me know down below in the comment section, what do you guys think about all of this information? What is your price target for AMC? Now, before we get into the data around AMC and a price prediction, I think it's even more important to talk about the catalyst for next week, which we do have Microsoft earnings January 25th, and then we have Jerome Powell giving his speech, his FOMC speech, on January 26th, and then the next day after that we have Apple earnings. So these are the two, biggest companies in the world, and then Jerome Powell mixed in the middle. It's like a sandwich of potentially good news or bad news, back to back to back to back. So depending on what earnings are and what the guidance is, because that is more important, because these companies, Apple, Microsoft, they're likely to report good numbers, but if they say, hey, we're seeing demand slowing down, we're seeing, people are not spending as much money, markets are going to have to price that in quite aggressively. And basically, as soon as they say that, the markets are going to start pricing that in. And that's exactly what I expect to happen, is you're going to get weak guidance. And even Apple is still up substantially in the past 3 months, whereas I'm sure, look at your portfolio, the mid caps are getting beaten into the ground in the same time frame, with stocks like DraftKings, SoFi, AMC, PayPal, Square, all of these I own are down over 60% from their highs during the same 3-month time period. So the markets are being held up by these large cap stocks, and if they come out and say, hey, 2022 is not going to be as hot as people expect, then I do think you're in for a rapid, bloody sell-off. And just so you guys know, Apple controls about 12% of the market weighting. So if Apple goes down, say 10%, the markets are going to fall 4 to 5% just off of that alone, and the fear that that will cause. Now, with Jerome Powell, his speech, it's about 50-50. Some people are calling on the Fed to shock the markets. Literally, that is the words, to shock the markets and to crush the markets into the ground, to crush those inflation expectations, because inflation expectations are more important than what the actual number is for inflation. Because since 2020, think about it like this, from 2020, people have been expecting, hey, we're going to get inflation, we're going to get inflation, we're going to get inflation. That inflation didn't start until the second half of 2021, because when people expect inflation, consumers like me and you will accept the prices going up. And you don't get inflation because of no reason. You get inflation because people expect inflation, and then businesses start to raise prices because consumers will pay the extra amount, like Chipotle, like Nike, that did not see their costs of producing goods go up, but still raise prices because people were willing to pay them. So if Fed Jerome Powell comes out and raises rates as much as 0.5%, that's starting to be priced in by market participants, then that inflation expectation will get crushed and you will see lower inflation expectations, but you will have to sacrifice the markets in the meantime. Mix that with the companies, not Apple, Microsofts of the world, Facebook's, saying, yeah, we're seeing demand slowing down, that our numbers are not going to be as great in 2022. That's not going to be a great thing whatsoever. Not at all. And this is basically what I've been saying for months now. I've been saying, due to the lack of stimulus, the lack of extra money people have, you're going to see less revenue at these companies. And by my estimate, you're going to see a negative year in 2022 compared to 2020 and 2021 as far as the money Apple, Microsoft, Facebook, that these companies are actually making. So you're going to see a rapid repricing of valuations. This chart on Apple tells you that next year is going to be better than the year before. Like, quite literally. If it's not, you're going to see this rapidly come back down to this range of about $115 to $120 on Apple. That's going to cause a dramatic move in the broad markets. But the silver lining to this, if you are invested in AMC, is to say that, hey, the broad indexes are going to start coming down very rapidly, but we have already seen that happen in stocks like AMC and the other stocks that I mentioned earlier in this video. So I think the sell-off will still happen in AMC and your other stocks, but I think it will slow down dramatically. Like we seen on Friday, AMC only down 0.5%, but the Nasdaq was down 3%. So I think you will see these slower sell-offs in stocks that are already down 60%, and you will see the indexes falling much more rapidly. Why is that? Because people, once they sell out of those large cap stocks, they either go into cash or they start to buy these severely undervalued stocks like AMC, like DraftKings, SoFi, PayPal, Square. So that sell-off would not go as fast as the broad markets. Hopefully that makes some sense to you guys, and that is a very bullish thing at this moment in time. I think we have already suffered most of the pain, even though the pain has just started for the broad markets. So now let's talk about AMC, and let's get into the ortex data first. So let's refresh this. We're looking at 19.78% short interest of free float, 101.53 million shares that are sold short. Cost to borrow is really a joke here, guys. I don't think if you went to your brokerage or a bank that's a prime broker like JP Morgan or Goldman Sachs, they would let you borrow AMC at 1.47% to sell stock short. I don't think that's the case. So I think these cost to borrow numbers are just bullshit, to be honest with you guys. Share utilization is 71.47% and the days to cover is 2.64. So if we do see money flowing back into AMC, into these other stocks, it's going to be hard for shorts to actually cover on their short positions, as that days to cover does tell us right now. And that's just going through the roof. So that is very bullish, and that's exactly what we want to see. So all is looking good in that aspect. Obviously, take these numbers with a grain of salt. I think the real short interest is in between 40 and 80%, like I've said, for a very long time now. As far as the max pain, I did not actually have that up, so let's pull up the max pain real quick. And max pain for this upcoming week is going to be $22 per share. If, things do go more smoothly than I expect, then a $22 is not off the table. That's a almost $5 move from where we are currently at. But these stocks like AMC and these other stocks have been beaten down so much that I think a good bounce is definitely in the cards for this week. I wouldn't, make any bets based off of that, but I think it is certainly possible and not too unrealistic to think that could happen. As far as the institutional ownerships, we can see some very interesting things as well happening over here, with a lot of firms upping their positions a lot. Here's a 10.79% increase, a 64% increase. Another, those are put positions, increasing those a lot from Goldman Sachs and Clear Harbor Management. You can also see a lot of firms that are completely selling out though, so that's not necessarily a positive. A 43% increase right there. 375% increase right there, 254% increase right there, like we have already went over. So it's a bit mixed as far as institutional investors and what they have been doing with their actual positions, but these guys get fearful and they get a little paper handy. But that's good for us, because ultimately once they come back into the stock, that's when you see the monstrous moves. And with us controlling over 80% of the flow of AMC, I think it's safe to say it doesn't matter what institutional investors do to the downside. It just matters when they actually start buying shares again. So, all right, let's dive into the chart with AMC. I do want you guys to know, if I don't respond to comments in the comment section, I do look at them, but I do have live streams from 10 p.m. to 11 p.m. Eastern Standard Time. So if you're in California, that would be from 7 to 8 p.m. your guys' time, because I do have a lot of people from Cali that, you know, watch this channel, that do join the live stream. So just putting that out there. If you guys want to ask questions about real estate, about the broad markets, about trading, about AMC, or anything else, I do it all. Real estate agent, I own rental properties as well. So come bring your questions to the live stream. Don't ask anything of you, maybe to hit the like button every now and again. But that is tonight, Sunday night through Thursday night. The only days we do not do that is days where we don't have futures, which is Friday and Saturday. So come check that out and join us later on tonight. It's a great place to be. So as far as AMC and the actual chart, I'm just going to throw this out here. I think my price prediction is going to be about $15 by the end of the week. On the worst end, I don't see us falling under $15 because, like I said, I think that sell-off is not going to go as rapidly, because AMC is already down as much compared to the broad market. So I would put my bets at about $15 for the price prediction, because I do think it's going to be a very negative week for the broad markets. But and I should clarify that I do think Monday could be a good day. Monday or Tuesday could be positive, because we don't have the catalyst until the 25th, 26th, and the 27th. Monday might be a good breather day, and actually a good day to exit out some of your call positions if you do have those. I'm not sure what you guys do own, but I'm not personally in any calls right now besides one SoFi call, which I will be exiting on Monday as well. Now, as far as the actual charts are concerned, it does not look all too good. We had this inverse head and shoulders that has completely dissolved away. We are quite a bit off of our 50-day, 100-day, and 200-day moving averages. If we pull up the Bollinger Bands, we can see we are on the lower end Bollinger Band, and that's actually where we bounced off of, and we did hit that low at $16.22. Bounced right off of that lower end band and made our way back up. Now, it is very possible that we do break above to about $18.50 or even $19 on Monday, and then we do come back down to that $16 range. I'm just going to put my worst case scenario at about 15. You know, my base case scenario about 16, and my best case scenario about 18.50. That's this line that I have drawn right here, and I think that's probably the best case scenario given the insane amount of volatility and the catalyst that we are going to see for this upcoming week. As far as the MACD is concerned, we are in bearish territory. It could be worse. We could be, you know, this bearish over here, and that's the gap between the blue and the yellow line. We're not seeing that right now, so it's not incredibly bullish or bearish, but it's still pretty bearish nonetheless. We really do need to get back up to about $30 per share though to start seeing the first legs of the actual MOAS. But if you guys have been following this channel, you know, I don't even have to say this, but we have to see the markets come down in a substantial way to see that liquidity being restricted until we actually do start to see the MOAS, when shorts just don't have enough money to cover their margin calls and their margin increases that they will have to fund in their portfolios to stay in their short positions. Now, it's not going to happen for no reason though. We need to see some kind of catalyst happen for AMC at the same time that we are down in the dirts in the markets. And I think Adam Aaron and his team is smart enough to realize that, and they want to see the MOAS just like anybody else, because after all, they've been selling shares on the way down. They're going to want to sell some shares at much higher prices if they can make that happen. So that's basically the scoop. As far as what else you guys need to know is that the volume is about 65 million on Friday, about 51 million the day before, 35 million the day before that, and 55 million the day before that. So we're not seeing high volume days. So it's not implying to me that you're just seeing apes selling out in a rapid pace. It's not that high. If you were seeing 100 or 200 million shares for volume on these big red days, that would tell me, give me a better picture of apes selling out, but I don't think that is the case. I think we are actually in a better situation now than we have been in a long time, as the broad markets are coming down, as shorts don't have as much money to cover on their short positions or to fund their margin calls, their margin portfolio. So that is going to be all for this video. If you guys found value out of it, hit that like button for me. Consider subscribing to the channel. Let me know in the comment section what do you guys think about this information. Make sure to join us later on tonight, 10 p.m. Eastern Standard Time to 11 p.m. Eastern Standard Time, give or take. Sometimes we go a little bit over if it's crazy. I think the futures are going to be a little bit crazy tonight, and the rest of this upcoming week is going to be absolutely wild. So we have a lot to talk about. Make sure to join us over there. If you guys want access to all of my trades in real time, link for that down below in the pinned comment, and the link for my Twitter account. Go ahead, follow me over there. Love and appreciate you guys. Thank you for watching. I will see you in the next one.